As the stock market rockets higher just about every day, lots of pundits are rushing to the airways to tell you that the reason this is happening is because the dollar is being debased. We're printing so much money. Some assets have to inflate, and that's stocks. Our guest today, Mark Dow of Pharo, hedge fund manager. You say that's just completely wrong.
Yeah, I think they're right in terms of the direction of the dollar for the wrong reason. It's really simple. The whole debasing of the dollar is false on its face if you look back and at the balance sheet of the Fed. If you ask most people how much money have they printed over the past 6 months, they're going to come up with some kind of number, fairly large. But really, the balance sheet of the Fed has been stuck at $2.1 trillion since October of 2008. So it's not that. It's not the supply of dollars that's changing things.
But didn't we, I mean, just to pause on that for a second, didn't we have a huge spike leading up into October? Because you look at most charts and it's moving along nicely flat, and then it goes through the moon. Yeah. So aren't we just seeing the after effects?
Not really, because the banks aren't lending it on. There was a six-week period in which they expanded base money very rapidly, right? And banks haven't been on lending that. So the supply of dollars in the system is not changing. In fact, it's contracting to some degree as the world deleverages. People focus too much on the supply of money and not on the demand for money. And it's the demand for dollars that's going down that's been driving this. It's not the Fed trying to debase the currency or the amount of money we put in the system. Ironically, countries like Australia and the Euro bloc, which see increases, meaningful increases in their money supply, see their currencies going up. So that tells you right there it's really about changes in demand for the currency rather than changes in supply.
And I want to hit that in detail in a second. One more question on this, though, is, I mean, the markets are forward-looking. So isn't the market saying, okay, no, not yet on the lending, but it's going to bleed in there and the Fed's going to blow it and not pull it back fast enough, and so that's going to destroy the currency?
If the treasuries are telling us a different story, for the first thing. Second, they would presumably be saying the same thing in the Euro bloc in Australia, right, where the money supply now is increasing faster, and they show no signs of pulling that back. Australia did tighten rates once, but the Eurozone has not. So I really don't think that's the story. And, you know, it's been over a year, and the lag process in monetary policy usually, you would have seen those effects now. And ironically, when the money supply was expanding back in September and October of last year, the dollar was rallying. Right, and it just shows you it's really the change in demand.
And so, so explain that. So, what is it then?
Well, the big story, it's quite simple, is the dollar was the standard over the past 60 years. In any country you went to, the developing countries in particular, you got the hotel bill in dollars. You could pay a cab driver in dollars. Wealthy people saved money in dollars. Local companies kept a war chest of dollars offshore to ensure that they could buy the inputs for their productive processes. They couldn't trust their central bank to provide it when they needed it. Now, since about 2002, the paradigm has shifted in a lot of these countries, and they trust their own currencies. So they say, what am I doing 100% in dollars? And it's really just a diversification process. No longer in India do you get the hotel bill in dollars. The transaction demand for dollars all over the world declines for that reason. Wealthy individuals in Brazil don't have 100% of their portfolio in dollars anymore the way they used to. All of this is weighing on the dollar because there's an overhang. So it's not, as I like to say, it's not a hangover from bad policies in the past. The past 10 years, which is what a lot of people allege, or the printing of money now, or any deliberate policy to debase the currency. It's really 60 years of the dollar being the only game in town, and now the playing field has a lot more choices on it.
And so where are we in that process? How much farther?
Gosh, it's hard. It's always hard to say, but it's pretty clear to me that the dollar is going to be under pressure for some time. Now, it doesn't mean that it goes lower, although my bias is that it will. But what I do know, or what I do feel confident in saying, is that it will stay below any fundamental sense of fair value, any kind of intratemporal measure of fair value for quite some time.
So it doesn't bother you that everybody and their brother is saying the dollar is going to collapse from here?
Well, as I say, they're right for the wrong reason, and this happens very often in the markets. And to some extent, that people say this, it's somewhat self-fulfilling. You know, as I say, you look at the Fed's not printing money; they're not debasing the currency, as people allege. The fiscal story really doesn't hold up either, because treasuries are rallying massively, and they're extremely well bid. So it's really, they'll figure it out sooner or later. It took a couple of years for people to realize that the dollar was negatively correlated with stocks and that oil was positively correlated with stocks. Now people are figuring that out. So, you know, fashions change and the truth will ultimately emerge, but for right now, people are right for the wrong reason.
Thank you, Mark.
Yeah.